Another private bank accounting discrepancy. Should we call this as a scandal? Let's leave it to investigating agencies what they want to call it. Yes, we are talking about IndusInd Bank, which is under SEBI probe. The key points are 1500 crore net of taxes understatement of losses, SEBI investigation for the insider trading and misreporting. Stock has fallen already by 30%, wiping 20,000 crore market cap. Hi, this is Prabhanjan Rao from Elysian Investment Advisory. We are a SEBI registered investment advisory providing curated solutions for long-term wealth creation, retirement planning, lifestyle planning, and last but not the least, estate planning. IndusInd Bank mislead investors? Let's break it all down. Here's what we are going to discuss today. The start of the problem, what IndusInd Bank is saying, connecting the dots, stock market impact and market reaction, SEBI investigation and insider trading, RBI move and CEO extension issue, broader governance and banking scandals. What should investors do now with IndusInd Bank? Final thoughts and investor takeaways. What is the start of the problem? Let me explain how the issue began with internal foreign currency liability deals. IndusInd's treasury unit has two desks. Internal desk, which uses hedge accounting, external desk, which uses mark-to-market, which we typically call as M-to-M accounting. These two desks should balance each other out, but the bank accounted for profits while ignoring the losses. How premature deal termination and premature withdrawal exposed the inconsistency between profit booking and loss accounting. The issue has been going on for 5 to 7 years, leading to overstatement of profits in the past two financial statements. What is IndusInd Bank management saying? The bank claims it discovered the issue only in October 2024 and hired an external agency. And here is what management's justification. External agency appointed to review derivative accounting, moved to a new treasury backend system for better controls. Loss of 1520 crore INR will be absorbed in Q4. No long-term financial damage. The bank says it's a one-off item and not a regular item. The bank's full year profit and loss account will be in profits and not in losses. The bank may reverse some of its provisions to offset the losses, as confirmed by its CEO in one of its interviews. What does the bank say with respect to capital adequacy? It says it will be above 15% and they got relief due to MFIs. Due to relaxation of risk weightage on the MFI, which was earlier at 125%, now the bank operates MFI with 75% for businesses and 100% for consumption purposes. Even if they take 50% for each of these, the bank will gain 60 basis points on the MFIs. Well, there has been some recent updates. Since CEOs has been given shorter tenures by RBI, which clearly says that RBI is unhappy with the management. In light of this, board to submit new CEO names by September to October for RBI approval. Second is, an external agency has been appointed to check on who is responsible for these lapses, including the accounting lapses. RBI has done a preliminary checks and told that IndusInd Bank's capital adequacy is adequate. Now, let's connect the dots. The bank is supposed to comply with RBI guidelines by 31st March 2024. That means they might be preparing to comply before March 2024. They might be knowing the anomaly, though not the quantum, much before. They have appointed external agency to probe into this. The CFO resigned in January 2025. The key managerial personnel, including CEO and deputy CEO who ought to be in the know, has sold 80% of their shares prior to Q1 results. It's not only 80%, they sold it at a profit of 2.5x of their annual CPC of financial year 2024. over 100 crore value of the stock has been sold in May, maybe in a month, or which is in June 2024. Now, let's understand what is its impact on the stock market. Stock fell by 30%, eroding 20,000 crore in the market cap. Major institutional investor LIC lost almost 900 crores on its 5.23% stake. The investor has almost lost 60 to 70% from the time the CEO and deputy CEO has liquidated the stock from its peak. The investor has invested when the price to book was 1.6 or 1.5 times, which is not at all an expensive proposition, and today the stock is trading at 0.7 times or 0.8 times the book value. The investor's confidence has taken a massive hit. Now let's understand SEBI investigation on the understatement of losses and insider trading by IndusInd Bank. SEBI is currently investigating two major violations. One is understatement of derivative losses, a breach of disclosure and listing regulations. Two, potential insider trading. Key management personnel sold 80% of their shares before Q1 results at 2.5 times their annual CTC, totaling to 100 plus crore. The timing of share sales. The CEO and deputy CEO liquidated shares in June 2024. Stock crashed 30% between mid-September and October 2024. SEBI has asked NSE and BSE for trade data to confirm insider trading. Now let's also understand RBI's unusual move. CEO gets only 1 year extension. RBI usually extends CEO tenures for 3 years, but in IndusInd's case, it was just 1 year. Why? Did RBI suspect weak governance? Was RBI aware of internal risk and control failures? This raises a serious question: how reliable are the internal audit systems of our banks? However, RBI has clarified recently that IndusInd Bank has got adequate reserves and its capital adequacy ratio is as per the guidelines. Let's sneak peek into broader corporate governance and private bank scandals. IndusInd Bank isn't the first bank caught in governance lapses and misreporting. Other major cases in the Indian history are like this: Yes Bank, high NPAs and liquidity crisis; Lakshmi Vilas Bank, governance issues, RBI moratorium; IL&FS, massive debt mismanagement; Dewan Housing Finance DHFL, fraud and default; Punjab and Maharashtra Cooperative Bank, rupees 6,500 crore fraud. Pattern of weak governance in Indian private banks raises investor concerns, dampening their confidence. How does this impact on the investors, and what are the lessons investors should learn? Investors' confidence shaken due to lack of transparency. While the bank claims to have capital buffers and regulatory compliance, the damage to its reputation is significant. Retail investors must track corporate governance very closely. Regulators need stricter enforcement to prevent such failures. Do not blindly trust management statements. Always check financials and disclosures. So, what should investors do with respect to IndusInd Bank shares? What we believe is, since the bank has been surrounded by a lot of investigations, let this get cleared. Then the investors can take an appropriate call whether to invest or not to invest. Please do not consider this as a stock advice. So, to conclude, this isn't just about IndusInd Bank. Though we have confidence in our regulators, this is about the trust in India's ethical practices in the banking system. What do you think? Should there be stricter penalties for banks hiding losses? Let me know in the comment section. Have an Elysian day.